Our currency is getting weaker, or has become weaker against a foreign currency. That's the US dollar. And it is because of a number of factors. Some of these are beyond the control of the bank and even beyond the control of the country. Some of them are external factors. They include the shocks that we see arising from other regions, such as, for example, the war that is happening in Eastern Europe, and the one that we are seeing happening in Middle East, between, for example, between Israel and Gaza. That has an implication on the supply chain. When supply chain is disrupted, it affects supply itself and the prices. So that's what we see beyond our borders. But just cross to our border, we have the issue of Sudan, which has really disrupted our key source of revenue, and that is oil export. The war in Sudan has made it such that whatever little that we use to receive has become too small. And we are a country that depends so much on imports from other countries. And for you to import, we need the US dollar. So the lack of hard currency has meant that our ability to intervene in the market has been limited. But this is not to say that we are totally out of our toolkits. No, we still have the tools, but it's just that they have been affected. But so, while there's a crisis, while there's the issue with currency depreciation, we are not just folding our hands and calling it quit. We are working. And here are the few things that we are doing to continue to strengthen our currency. We are continuing to strengthen the monetary policy framework, and in this case, the Bank of South Sudan employs monetary policy tool such as adjusting interest rates and reserve requirement to control the money supply. When we control the money supply, that has you pin down the inflation. So that we are doing, the strengthening of the toolkit is working. Of course, some of our tools, there are some of the tools that are very strong, given the level of development in South Sudan, but there are some of the tools that are not very strong. Reserve requirement is one of the tools that we can just change anytime. You know, reserve requirement goes like this. If you go to the bank, you take 100 SSP to the one of the commercial banks where you bank. The bank is required to keep 20% of that 100 SSP, and the 80% is considered excess reserves. They can't do anything with it. They can lend it to the public to make more money. They can lend it to other banks that are running short of cash. This 20% that they are required to keep, they don't keep it. They bring it to the bank. So when we think that there's too much SSP in the economy, we increase the reserve requirement so that they keep less and spend less. So this is one of the tools that is in the hands of the central bank. Of course, the interest rate has other mechanism. The interest rate works in so many ways. There are so many interest rates. If you go and buy a car in other places, there's an interest rate that you pay. If you go and buy a house, a mortgage, there is an interest rate. If you are building a road, there is even a bond, an interest rate. So there is interest rate on everything. In the case of South Sudan, all these interest rates are not working. The only interest rate that's working, or the rate that we know, is the exchange rate, and that's the only physical. That's the only tool that our people know. Why are these rates not working? It has nothing to do with our current state of affairs. It has to do with our legacy, where we have come from. Where we have come from, to build the financial sector, to put it in place, takes time. And when we became independent, we found that the system as a whole, we have to start from scratch as a country. So at the moment we are building there. But to put all these tools in place takes time. The bank is working on those. This is not to renege or to say this is not our responsibility, it is our responsibility. But what I'm saying is that interest rate is one of the policy instruments that is not strong in this country. And there's a reason. I just gave an example. If you go now to one of the car dealers or to the dealerships, and you say, can I buy a car on credit? They will not give it to you. They want you to pay right away, to pay everything at once. That's not how markets are supposed to work in other places. If I have $1,000 equivalent in SSP. In other places, I can buy a car, even if it is a 10-hand car. But in our situation, they want you to pay upfront. Some of these banking reform that we are doing are intended to improve the credit rating and to also ensure that you don't have to pay cash upfront, that you can do the credit. There's also the fiscal discipline that we are encouraging and advising the government. This is what I have said over and over. Whenever there's a gathering of government officials, or even in some of the receptions that I have gone to, I usually say fiscal discipline is something that we need in this country. How does it come about? Parliament passes the budget. It goes into law. It signs into law. And that says we spend based on the budget line. We spend beyond, there must be a reason why we are spending beyond. If you try to spend what you don't have, there's also, you have to justify that, and it's not okay. So fiscal discipline is one way in which we are working very hard with the rest of the government sector to ensure that they avoid too much budget deficit and excessive borrowing. Because this one in the end, what you borrow in the end will have to be paid anyway. And so if you minimize those, then you can really reduce factors that can lead to inflation and currency depreciation. The last two one is improving governance and transparency in whatever we do, whether in through payments, through check printing, payment anywhere, payment at the bank, payment at the commercial bank, as long as there's transparency, there's less wastages or leakages. And at the same time, the key has been what the president and the rest of the government officials have been saying, which is we must diversify. Depending on one source of revenue has been catastrophic. We have seen it. It's good that this year a lot of people have heard the message from the leadership that we must go to farms and try to do that. So agriculture is one of those, so that we can expand the revenue base. At the same time, of course, diversifying also into other sectors such as agriculture, in which I've just said, manufacturing and services. This can reduce our reliance on one source of revenue and expand the revenue base. Because if the government were to hand revenue from the oil and more, we would have just said, hell with oil, because we have something else. But at the moment, we are constrained. The last 1 year are our effort to be able to enforce or to implement the MOU on a single treasury single account. You might have heard about that. It goes like this, that if government has several accounts, they are consolidated, and payment in US dollars is reduced to essential. No one can say you can eliminate payment in US dollars. It's not possible, because there are certain payments that you need to make in US dollars. Somebody wants to travel abroad, they have a mission. You cannot use SSP in Eritrea or in Ethiopia. If you are there, you need the US dollar. You want to pay your international obligations to the UN or AU or anybody, you need US dollar. So there is a need for US dollar, but not everything that need to be paid in US dollar. And also for us to go ahead to price some of the products at home in US dollar, that area is not okay. And this is one of the way when we move toward implementing the TSA, the MOU on the TSA, it will enable us so that whatever little revenue that the government gets in USD is not all spent in dollars. That much of it is left for the bank to serve us to be able to have a reserve. And so this brings me to the last point that yes, we are working with the relevant institutions, especially the Minister of Finance, to ensure that we build reserves. Central Bank build reserves in several ways.